Hello everyone, let's have a look at EURUSD. Let's see what the price action is saying, and let's analyze our previous trades to see how well they're getting on. We were in a trade, I believe this was given out, I think late last week or perhaps early this week. And let's just have a quick recap of where we were, if and only if I can find it. So let's see. This is Bitcoin. This is a gold trade. This is Bitcoin halving. Euro USD, where are you? Maybe that. No, that's BTC. That's BTC again. Is it there? Ah, there we are. I think. Oh, it's not there. Anyways. We'll just go with it. But if you go back through our streams, we've got this trade that we were currently looking at for EURUSD. So we were saying we had that nice accumulation model, that Trinity model 2. We had tap 1, tap 2, tap 3, off we go. Not only did we have that tap, we broke out of this range, we broke structure. What do we expect after breaking structure? Our expectation of order flow is for a pullback to zone. We pull back, we have quite a deep pullback. Why did we pull back so deep? Well, we had a demand zone that was unmitigated over here. So if you look at that and you investigate that, you will see that. And then as a result, we then go up. Okay. So I was talking about that trade last lesson / last video, and I said, well, I entered a long, and the reason I entered a long was because I thought this was a pullback of that accumulation range breakout. All right, and that long is doing quite well, so we're still in that long, and that long is very well in profit. Let me have a quick look. Actually, let me just have a quick look to see if it's time to take some more profits. Why is that? No, because we've just broken this level, right? And even if I'm not taking profits, I'm definitely I'm definitely moving that stop loss. It's already at entry, to be fair. I've de-risked that trade, so this is house money at the moment. I am playing with Vantage money, house money. I'm pretty sure it doesn't belong to Vantage, but anyways, it's a free trade is what I'm saying, right? So let's see, why are we doing this though? Why are we rotating here? Well, let's build a narrative. Well, first of all, we had that range that we broke out of. We broke down from the range, and prior to that range, we had a bigger range that we broke down from. This itself over here, this is a range in itself. Okay, so we broke out of that range, We also broke out of this tiny range here, which I'm sure some of you capitalized on for that juicy short. But not only was that a nice, aggressive short, we did say, well, this short will probably be short-lived, in a sense that, we've broken out of a range. We expect to have a pullback to zone, and that pullback is what we're seeing right now. We are in a bear trend. It's undeniable. We're in a bear trend. But even though we are in a bear trend, what do we expect in a bear trend? A swing down, but a pullback. A swing down, but a pullback. A swing down, but a pullback. Even if we form a range, if we break out of that range, we still expect a pullback. And I believe this is what we are seeing so far. We have our range above, so we have our range, okay, and we have a breakdown from that range, and we're looking to pull back, potentially for continuation down. All right, so what we did in this channel is we caught that pullback. We said that pullback was going to commence from this zone number 1 that was given well in advance. So congratulations to anyone who capitalized on that one. Make sure you are managing your trades effectively. Make sure you've de-risked that one, and don't be greedy. This is just a pullback. It's not going to last forever. Okay, it's just a pullback. So we're currently still in that trade. Now, just a few things to notice. Why are we getting sort of like an aggressive move over here? Well, it's because we've got these fair value gaps that are getting filled. This price action here is as inefficient as they come. Okay, remember what we always say here: easy up, easy down, easy down, easy up. Now, what comes to mind? Well, also you can see this inefficient price action here as well. We can see this massive juicy fair value gap. So I won't be surprised if we don't get a reaction of this old range extreme. There's going to be some resistance here, of course. All right, there's going to be some resistance here. All right, So I'm not going to be surprised if we do break out from this resistance. All right, this move up could be quite sharp. Why? Because the move down was quite sharp. Okay, so just bear in mind for that. The next major level to look out for resistance, the next obstacle for Euro USD is coming in at this level from 1.06979 all the way up to 1.0, not 69 yet, 1.07606. So that's a zone you want to watch out for a reaction. Why is that a zone for a reaction? Well, that was the last bit of supply or slash demand before we broke down. Okay, that was the last bit of price action before it broke down. Last bit of resistance before we broke down. We had some sellers and buyers deciding what to do there before we broke down. So it only makes sense that when we come back to that level, it's going to be a decisional level, and there's going to be some interaction, some resistance before we decide where we are headed. Don't forget, guys, we've also got this, bear trend line. Is Euro USD thinking of coming up, playing around, coming up to get that retest off this trend line for that continuation downwards? Well, let's see. That's something we have to keep an eye on. So I guess our jobs now as traders is to figure out where the next trade is going to be. I'm still in that long. I'm going to stay in that long. I've taken profits. I've moved my stop loss to entry. So really and truly, that can do what it wants to do now. All right. But let's see, where could we potentially get a retracement, a continuation from? Well, idea number one is I want to analyze this old range, okay, and I want to see what's hidden inside. I know we've got this trend line liquidity, but I would like to see what's hidden inside. I know my market structure at the moment is telling me, lower low, lower high, lower low, broken structure range, broke down, retraced, all right, and now it just transitioned bullishly again. Okay, our market structure has just transitioned bullishly, and that looks like this. We've had a low, we've had a high. No, that's incorrect. We had a low. All right, we've broken structure here. All right, we've retraced, and we're looking to carry on bullishly. That's what our market structure looks like. All right, but where are we going to get that reaction from? Our next reaction, the hunt for the next reaction. Well, to understand that, I want to see, what the millions and millions and millions and millions of traders, trading Euro USD. I want to see where they interacted with this market. I want to see where they had high volume within this market. So I'm going to take my volume profile, all right, and I'm just going to analyze that last range. Okay, now what we can see here is that we've got a value area high coming up there, confluent with our 4-hour supply zone in interesting area. We've got a POC coming not too far away from this zone that we have over here. And that zone, it's not labeled at the moment, so I will need to investigate to see exactly what time frame that zone is in. All right, now that's a decent area. But what we can also see is that we've got this value area low. Now, in the case that Euro USD does not have the strength, does not have the momentum, does not have the guts to go all the way to this trend line, there is a chance that it's going to react from this sandwich. Where is this sandwich? Now, this sandwich is the sandwich between, it's the burger between the value area low and the range low. There is a chance we get a reaction from that. And also, we've already had a little bit of resistance there. So that is an area to look out for a trade. Hence why I'm going to put that as my area number one. And we are getting close to that area. Okay. That's area number one. All right. Now, area number two, in the case that we do break into that zone, right? Well, if we do break into that zone, that could be quite interesting. Why is that? Because what does range theory tell us? What does volume profile tell us? It tells us if we're to reclaim this value area low, all right, there is a higher probability, higher likelihood that we get accepted back into this old range. If we get accepted back into this old range, there is a higher probability that we take out the POC. If we take out the POC, there is a higher probability that we aim for the value area high. And if we aim for that value area high and close above the value area high, there is a higher probability that we go and test that range high. Okay, so that's something to be aware of. All right, and if that was to happen, guess what? That means this trend line, this bear trend line we have, would have been broken. And really and truly, remember what technical analysis and fundamental market structure says. It says you should not look to enter a counter trend trade until you have had a break of a significant trend line. So in the case that we do rally up and break this trend line, that would be a case for consideration as to a market structure change. What do I mean? A change from perhaps the daily bearish to daily bullish, or the weekly bearish to weekly bullish. Okay, so anyways, I digress. So that's trade number one I'm looking out for in that sandwich over there. Trade number two will have to be here. I'm going to draw this down. I'm going to take this supply zone to cover that POC, and that's going to be my area number two. Okay, and of course, area number three is slightly higher. Now, these are my next two areas for a reaction. If I get a reaction in those areas, I'm in. And what do I mean in terms of a reaction? What do I mean in terms of my confirmation? Well, let's go to the whiteboard. Oh, it's right there. Perfect. Okay, so in terms of a confirmation, we're obviously looking for the bearish case. So what I'm going to do is I'm going to flip this upside down. Okay, and this is exactly what I'm looking for as far as my confirmations go. I'm going to get rid of this. I'm going to imagine this is our supply. This is the equivalent of the supply that we're looking out for below there, all right? Or perhaps the POC and the value area low sandwich. Now this level, as we mark up, creating higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, I'm looking to first of all touch my zone, touch my supply zone. But not only am I looking to touch my supply zone, I'm looking to get a reaction of my supply zone. Because what is the job of supply? The job of supply is to create the fuel to break structure bearish. What's the job of demand? The job of demand is to create the fuel to break structure bullish. So, will this supply do its job? Will it break structure? And if it does, what we're going to see is we're going to see a change in market structure from printing higher highs and higher lows to lower highs and lower lows. And then more likely than not, we're going to get a retracement. I'm looking to enter on that retracement. Now, some people will enter on that break right there. If that's where you play it, fair enough. All right. I find it's the higher probability if I wait for that retracement. And not only is it a higher probability, it's better risk to reward. What do I mean by that? If we enter at this break, our risk reward is looking at 1.87, considering this example. Of course, this example has been manipulated. It's not exact. If we are to wait to get a better entry based on a retracement, look, if we just wait, we've already got 2.5 risk reward, which is way better. All right. So that's what I'm looking out for. Now, that's my primary confirmation. As far as my ancillary confirmation or my secondary confirmation, I'm looking for Market Cipher to tell me what to do. Now, the chances are Market Cipher will tell me there is going to be a change in direction before there is a change in direction. That is the beauty of Market Cipher. Market Cipher will help you predict when that transition is going to take place. And it will do so by showing you that there is going to be a bearish divergence. Now, bearish divergence and bullish divergences, obviously I go over this in my one-to-one sessions, but just a quick overview. A bullish divergence is when, as price is rallying up, creating subsequent highs that are higher than the prior highs, so creating higher highs and higher lows. Our momentum is doing the opposite. Our momentum is creating lower highs and lower lows. So we can see that here as we've got this high trending up, but in our momentum wave, we've got it trending down. This is what we call a bearish divergence. All right. So because they're going in different direction, they must synchronize at some point. And that's the point where they converge and start going in the same direction again. This is an indication that there's going to be a change in direction in the market. All right. So now I use bearish divergences with Market Cipher. You may not have Market Cipher. All right. You may want to use your bearish divergence with your own confirmation, whether it be, your moving averages, whether it be your RSI, no matter what it is. Just make sure you're waiting for your confirmations before you enter. Now, of course, if you follow my signals and if you follow my setups, chances are placing limit orders. Let's say you thought this trade was going to react at this level, and you said, you know what, I'm just going to place a limit order over here. Okay, it's going to come there. It's probably not going to go past that zone. I'm going to create a limit order over there, and I'm going to cover the supply zone. Now, that's a strategy that it can work. Some of my students definitely use that strategy, right? The lazy ones that can't be asked, they definitely use that. But I would not recommend, honestly, I wouldn't recommend. Why would you want to risk your hard-earned money, all right, on just a limit order? You want the market to show you what it's doing before it does, all right, and before you click that buy or sell. So please, 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 please make sure you're waiting for your confirmations before you're entering these trades. All right, so that's it. That's what I'm looking out for. Let's go back to the chart. The chart's hiding away. All right, so there we are. All right, that's what I'm looking out for. Those are my next zones. All right, let's go back to the correct orientation. All right, and yes, so that's pretty much it. There's not much to say as far as Euro USD goes. I'm looking at that zones. Whenever I get to those zones, when price reacts, I'm gonna react. All right. If you found this information useful, if you've just got a little bit more clarity as to what the price action is up to and what your next trade might look like, don't forget to hit that follow button, hit the boost button, and oh my gosh, everyone's calling me today. Hit that subscribe button, hit the follow button, hit the boost button, hit all the buttons. All right, we're now on IG. I'm also on TikTok. I've got the YouTube going. So feel free to connect with me in each and every one of those platforms. And also, if you want to have a chat with me, if you need some assistance, etc., the best place to reach me is on Discord, and the link is definitely in the bio. All right, otherwise, you have a brilliant, brilliant, brilliant evening wherever you are in the world, and I will see you next time.